Income tax 2020. Tax software example. Adjustments to income. Self-employed health insurance deduction. Come in, relax with income tax 2020. Here we are in our Lacerte tax software. You don't need the Lacerte tax software in order to follow along, although I do think they have a 30-day free trial, so you might want to take a look at it if you can get access to it in order to be practicing with. It's a nice tool to be practicing with. We, however, are going to be focusing in here on the Form 1040 and related schedule, that being Schedule 1. We're going to be jumping back and forth from the data inputs to the forms to take a look at different scenarios, the tax software making it easier for us to do so. So we're going to be starting off with our standard scenario start off where we have the single tax filer, Eric Smith, that lives in Beverly Hills 90210. We have then the wages at the 100,000 being our starting point, W-2 wages to start off with. We have the 12,400 being the standard deduction. That brings us to the 87,600. We want to start off with the W-2 wages and then switch over to self-employed, which would be Schedule C oftentimes, to then think about what the health coverage would be related to it. So if we then take a look at that on our Excel worksheet, we got the 100,000 standard deduction, 12,000 for the 87,600 on the taxable income. So if we think about a standard W-2 type of wages, we could think about a situation where many people have basically some kind of connection to their health insurance coverage through their employer. In that case, then, from a data input perspective for health insurance, then, this is going to be fairly straightforward because anything that needs to be taken care of will typically be taken care of by the employer and then reported on the W-2 then. So we just have to enter basically the W-2 properly into the data input. Let's think about a situation now where we're not an employee, we don't have the W-2, but we're moving to self-employed income, typically a Schedule C type of income, and then think about the health insurance related to that. So we're going to say, all right, now we're going to move this over, and we'll see a lot of changes, of course, when we move the income from W-2 to a Schedule C. So I'm going to say W-2 wages, let's remove it here, going to take it out there, and then we're going to say, let's go to our Schedule C type of business and move that 100,000 here. I'm just going to put it into the income line item for now, and then go on back over and just observe the changes that we have just doing by that change. We move the 100,000 from line 1 to line 8, it then being supported by the Schedule 1. So if I go on over to then the Schedule 1, we've got the 100,000 here. That flows over to the first page of the 1040. We note that there's going to be self-employment tax calculated on this, and that would be on page 2, one place we can see this. We have not only the federal income tax calculated, but now we have the self-employment tax. We know that we're going to get half of that self-employment tax as a deduction, and that's kind of a similar kind of process to what we're doing with the health insurance, because this deduction then for half of the self-employment, we couldn't put on Schedule C. We instead put it on the Schedule 1. As we saw in a prior presentation, we have half of that deducted here. You couldn't take that deduction, even though it's related to the business, to self-employment income, on the Schedule C, as you recall, because if we did so, then it would actually adjust the calculation for self-employment tax, and you end up with a circular loop type of reference. So we have a kind of a similar issue, not exactly the same, but similar for the health insurance. So then if I go back on up to the 1040, we also note that we have this item here for the qualified business income deduction. I'm just letting the computer calculate that for now. We might take a look at it more closely later when we concentrate on then the Schedule C. So those are the adjustments we have thus far. And now we're thinking, okay, what if we have the health insurance now? That's another kind of item that we may be able to have access to if we're self-employed. So the bottom line here, you'll recall the rules that we looked at is if you are self-employed, you may be eligible to deduct premiums that you pay to medical, dental, and qualified long-term care insurance. And you can only claim the health insurance premiums right off when months either you nor your spouse were eligible to participate in an employer-subsidized health plan. So if you had access to the employer's subsidized health plan, then the assumption is that you would do that. Otherwise, then we're going to the health plan deductions here. So then we're going to say, okay, we're going to go to Schedule 1, and we're going to say that we're going to go down to the health insurance. That's on line 16. So I'm going to say line 16 is the self-employed health insurance. Right click on it, jumping to it. I'm going to say we want self-employment health insurance deduction. So I'm not going to do the override, but the deduction. I'm going to say here that we have then the 10,000. So I'm going to say, okay, we'll bring that on back to the form. And so there we have the 10,000. So 10,000 has now been included. That adds up to the 17,065 when adding it to the half of the self-employment tax, bringing that back onto the first page of the 1040. We see that on line 10. So we have it here on line 10. Notice what did not happen if I take away this, and I'm going to so that we can see just the forms that are relevant. If I go to the Schedule C, we didn't put it here in the expenses on the Schedule C. Notice what would happen if we did that. If they said, hey, put that deduction for your health insurance on the Schedule C, it would be lowering the 100,000 here. And you might say, well, why wouldn't I just do that? Because that would pretty much do the same thing, because then when I bring it back on over to the first page, instead of having the deduction up top, it would be reducing this number instead of reducing it down there. But notice that we're also going to be paying self-employment tax. So the self-employment tax then, if I look at the Schedule C, is going to be based on this 100,000. So by not including it on this schedule, that means it's not going to be deductible basically for self-employment, meaning you're going to pay Social Security and Medicare on it in essence, and then but it will be deductible, or we'll take it out with regards to the federal income tax calculation. So that's one rationale what you might think in your mind why that might be the case. So then we'll bring it back over, and that's going to be the standard process. Now, it will be limited to the amount of self-employed income. So in other words, if I cannot bring this to a negative number, basically a loss, due to solely the self-employed health insurance. So in other words, if I go back to the detail and I was to say, let's bring this income for the wages, and let's bring that down to 9,000. So 9,000 of income. And then if I go back to my forms, Lacert will limit this deduction. So now I've only got the deduction of the 8,364 plus the 636, which gives us that total of then the 9,000. So in other words, on the Schedule C, we had 9,000, and it's limiting the deduction here because we put in the data input 10,000. It's saying, hey, look, we're not going to allow you to pull over basically a loss, meaning we have the 9,000 here. We're not going to have a deduction related to that 9,000 that will take that into the negative territory. Now, it is possible to have a negative just on your Schedule C. It just can't be driven by the health insurance deduction. So if I had like an expense of 20,000 and I go back on over and say on the Schedule C, now I've got a loss down here. It's just not being taken into the negative due to the health insurance. That loss then the IRS is skeptical of, because you can take that possibly against something like the income. So the IRS is skeptical of losses because, you can have a big tax benefit with the losses. If you can claim losses, then you might be able to take that against other income.